CNBC-TV18 Bazaar Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call, live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Morning.
Starting a new week, third one for 2023, and we get into the thick of the earnings season this month, right?
Absolutely, we do. And there's so much data, right? As we kickstart trade this morning, there's the earnings from the weekend, HDFC Bank, Avenue Supermarts. There's Reliance that comes out on Friday. Yeah. So a lot to track this week.
And it was a good weekend, actually, right? India kicked off the Hockey World Cup, our campaign out there. Yesterday, we drew against England, but we won against Spain, so pretty good. India did well in the cricketing game yesterday. And Sonia, you'll be happy. Last night, Arsenal came out trumps yet again, 2-0 up, so we're on top of the table.
Oh, a good weekend for sport, a good weekend for the markets. So let's see. And we have a pretty long week. Reliance wraps up on Friday, which is going to be sort of an extended evening. So lots to talk about.
Absolutely. And, one hopes that for the market also, it's not going to be too bad. So let's just quickly kind of take you through what the setup is looking like this morning, right? Now, let me just put out a table which explains what we've seen in 2023 so far, the first 2 full weeks of 23 so far. This is something that I put out on Friday post-market hours. So just starting with that, this explains the near-term 2-week underperformance of India versus some of the other regional markets. The second column is FII flows. So India is sharply negative. Other markets have taken in a lot of money. And the third one is dollar returns. India is up about 0.9%. The other markets are up a lot more. Now, of course, we've been talking about this. We've been discussing this, why this may be so. Maybe China reopening at the margin, underperforming markets getting a little bit of reallocation. Is this tactical in nature? It looks like so far nothing untoward at all. And maybe at some point, some of the more structural, longer-term drivers start to kick in. But this has been the story so far. How are things looking as we begin a new week, right? Now, the global setup is positive. I think that's the base kind of scenario. The Nasdaq was up about 0.75%. And the US, by the way, has been slowly creeping up 0.5%, 0.75% over the last many trading sessions. So that's the Nasdaq change for you. The dollar index remains extremely well behaved. It's at about 102, and that's exactly the way emerging markets want it. Actually, it's down to 101.85, right? So that's great news. Oil prices have moved up, and at the margin, I'm seeing increasingly people who track oil and oil markets calling for the fact that maybe this lull in the oil markets on the way down is perhaps over. So Brent's moved up to about $85 and we'll talk more about that. Ideally, you want both dollar index and the oil prices to be lower, but you basically have got a situation where one is down and the other is up a little bit. Last week, the Nifty and the Bank Nifty both, let's start with the Nifty. The Nifty had a positive daily and a positive weekly close as well. On Friday morning, I was making this point that what you need on Friday is a solid, good close. That's what you want. We got that off the highs, of course, but it was 0.5% higher for the week, a little over 0.5% on the day. So that's good. Now, the swing low, which we made on just 2 days before at 17,761, when we broke the December lows of 17,774, the new low is 17,761, that becomes important, imperative that the market holds on to that and doesn't give that. It's not very far away, but on Friday we managed to put some distance, but let's hope we kind of build on that. So it's imperative that kind of is held. The immediate resistance is the 20-day moving average on the Nifty, which stands at about 18,077. And I think we're at 17,956 at close on Friday, so about 160 odd points away is where the 20-day moving average starts to kick in. For the Bank Nifty, again, the recent swing low of 41,729, I think, which was made on Wednesday or Tuesday or Wednesday, that is important on the way down. Again, important that is held. On the way up on the Bank Nifty, the 20-day moving average stands at 42,683. So again, the 20 on both the Nifty and the Bank Nifty becomes important to take out. And that, I think, adds a touch of confidence as we go into this week. The thing is, as you can see, the SGX Nifty is indicating a slightly higher start, mildly higher start. There's a lot of news flow, individual large stock-related news flow, which has got to be absorbed. And that, I think, more than anything else at this stage, determines where the market goes from here. Things like HDFC Bank and others, I think, will matter a great deal. In terms of a great broad direction for the market, I mean, there isn't one. It's a little bit of a muddle through as we've had, and I think that remains over the next 1 or 2 weeks as well. The budget, by the way, is exactly 2 weeks out as well. Guys, hi.
Oh, absolutely. And you pointed out a couple of local cues, right? I mean, this morning the SGX Nifty is indicating that the start will be mildly in the green.
Yeah.
I'm watching for a lot of the result reactions, and HDFC Bank would top that list. Very good set of numbers coming through. Strong NII growth for HDFC Bank. The loan growth was almost 20%, led by a 30% growth in the retail book and in the rural book as well. So except for corporate, the retail rural book has seen a very strong growth this time around. And the net interest income up almost 24.6 odd%. Only the agri slippages was something that was a bit of a concern, over 6,000 crores. But stripped of that, it was a good set of numbers from HDFC Bank. For Avenue Supermarts, the margin weakness continues. On the flip side, although HDFC Bank was good, Avenue Supermarts and Wipro delivered a weak set of numbers. In fact, for Wipro, it was the lowest revenue growth amongst its peers, just about 0.6% growth. So I'm watching out for that. But it's a big week of earnings. You have, of course, Reliance that comes out with numbers on Friday. But through the course of the week, today you have, Federal Bank that comes out with numbers. On Wednesday, there's Bank of India. On Thursday, there's Persistent. On Friday, you have not just Reliance, there's Asian Paints as well. And then you top it off with ICICI Bank on Saturday. So 30% of the Nifty constituents will be reporting their earnings in this week. So in that context, very important week. Global cues are positive as well. The handover has been good. The Nasdaq has seen its best week since November. And the Nifty, Prashant was pointing out some important levels. I think this December low of 17,774, we tested it once last week. We held on to it by the end of the week. So it's an important support level for the market. By and large, it's the line in the sand on the downside. So watch out for that. FIs, though, continue to sell. Once again, they've sold on Friday, and it's a total of almost 24,000 crores, relentless selling for 16 straight sessions. So I guess today the market will, of course, hold on to the December lows, but so many macro and micro cues through the week. So I guess, the market will have to navigate that.
Well, that's right, Sonia. And in Friday's trading session, the Nifty almost went to around that 18,000 odd mark. We went there for a smidge, and then, in fact, it quickly got sold into. So let's see whether or not that 18,000 odd mark can be conquered by the bulls. The big question is HDFC Bank, that can be in good form today, going by the numbers. So can it help the Nifty Bank as well as the Nifty move towards that 20 DMA? That's the question for me. HDFC Bank's performance is going to be quite important today because it's the large weight on the index. And valuation-wise, it's not trading as expensive as it was maybe a couple of years or so ago because it's been a relative underperformer. The buy zone for the bulls on the Nifty is at around that 17,750 to around 17,800. And I pulled up a couple of instances just in the last 20 sessions or so. We go towards those levels, and then on that day itself, you get a good bounce. So that's clearly the buy zone. What did the FIs do, in the F&O market on Friday? The Nifty did well. The Nifty Bank outperformed actually on Friday. So on the long side, well, there was some long addition. Close on 6,000 contracts were added. On the short side, there was some covering. More than 10,000 contracts were covered out. And the short positioning now is at around 57%. It's come down from around that 60 to 63% odd. So some part of the short covering has played out, but yet they continue to remain net short. So there is some good news that comes about, and that's what could cause a bigger short covering bounce that could come about. On the option side, they're not giving any big direction. But you're looking at the overall options picture, the 17,900 put, the 17,800 put. Well, between them, there was close to around 75 lakh shares getting added there. And there were clearly some visible signs of writing out there. But on the Nifty Bank, which bounced in the last few sessions, well, out there as well, you did see that the open interest was up 16 lakh shares odd, which is rather large, and the premiums around 170 rupees. So the guess is that there is some writing being seen out there, which brings us to the levels. The Nifty, 18,100 becomes a resistance zone, closer around that 20 DMA of around 18,080. The Nifty Bank as well, that's closer to around the 20 DMA. The 42,650 to around 42,750. So 650 to 750. That's because the 20 and the 50 DMA is in that vicinity. So just keep an eye on that mark. For me, on a closing basis, you want the Nifty to protect that 100 DMA. It conquered that in Friday's trading session. Well, you like it to trade about those levels. SGX Nifty suggesting a green start, 25-point up. I think at some point of time, you'll get a bit of a pullback. So looking to buy closer to around, the flattish line or maybe closer around the 100 DMA will become important. So let's see how that plays out, Sonia.
Okay, well, lots of big macro cues as well, through the course of the week. So I thought I'll just put some of that data in front of you. Today you have the WPI data for India that comes out for the month of December, so we track that very closely. Tomorrow there's the UK unemployment rate that comes out. There's a China Q4 GDP as well. And on Wednesday you have the Bank of Japan rate decision along with the US retail sales. So lots to talk about in terms of Qs. And the US futures are also higher after a good close that we had on Friday. So, along with a positive handover, perhaps given that the US futures are also higher, we could see some green on the screen today.
Possible that we are able to build on it. Let's keep our fingers crossed. Well, before we start, let's tell you what's lined up here in the first half hour of the show. We'll get you updates from markets across the globe. And Dean Kim of William O'Neill and Company will join us to discuss the global setup as he sees it. Our research team, as always, brings you CNBC-TV18's list of top 10 stocks to watch for the day. At around 8:30, we'll do a fundamental stock check on markets with Prakash Diwan, who will be with us.
All right, so let's kickstart the show then on the equity side. First up, we have Chetan Seth of Nomura, who says a moderation in US inflation along with China's reopening recovery continues to support his view that 2023 should be a far better year for Asian equities. He says they have argued that Q1 CY23 could still be volatile for stocks, assuming the US sees Q1 2023 job losses due to concerns around recession. However, he adds if the US economy does manage to avoid a recession or sees a shorter recession than their current baseline views, it is likely that the worst may be behind for stocks.
Okay, some money market views. This is B. Prasanna of ICICI Bank, who says the dollar eased further on the back of softer inflation print in the US as policy divergence between the Fed and major central banks is expected to reduce. Japanese yen appreciated sharply in expectations of further adjustment in the yield curve control. That's YCC banned this week by Bank of Japan. The meeting, by the way, the BOJ meeting is tomorrow and day after. Chinese yuan continued to rally, leading the Asian pack owing to capital inflows on account of reopening, while the Indian rupee traded stronger in line with Asian peers. But the RBI was seen smoothening volatility. Prasanna expects the rupee to trade in a range of between 80.80 to 81.80 next week.
And on the bonds, B. Prasanna says global yields continue to soften as inflation eased on expected lines and market pricing for terminal rates. Though Indian bonds are underperformed in wake of supply pressure owing to the upcoming fiscal budget, optimism around lower inflation and expectations of a dovish tin by the MPC was expressed via the OIS, which moved sharply lower. Prasanna expects bonds to remain range-bound and the 10-year benchmark to trade in a 7.2 to 7.40 range.
All right, we have a lot of stock-specific action to track for you today, and we'll get to that in just a bit in our special Top 10 segment. We're looking at Big Boy, HDFC Bank, Just Dial, Dr. Reddy's, Lupin, Sagar Cements, NCL Industries, Tata Steel, as well as L&T Finance. Their stocks on the back of positive news flow, while Wipro and Avenue Supermarkets, they'll be reacting to their numbers, and we're expecting them to open up with a shade of red.
All right, Dean Kim is now joining us. He's head of global research product at William O'Neill and Company. Dean, great to have you back on the program. Thanks very much. How is price action looking to you? Put all of it together. You've got stocks which are broadly higher, inching up. Dollar, which is sharply down. The dollar index is now down under 102. Oil prices are up. Many would argue that when, it's essentially an asset class. And in the near term, oil going up is good news. I mean, it shows buoyancy more than anything else. Your sense overall, Dean?
Yeah, basically, let's start with the U.S. The setup in the U.S. is that both S&P 500 and the NASDAQ recently had follow-through days, which means in our methodology, this may be the start of a sustainable rally. So we are advising our clients to slowly add to positions. However, we are not in clear just yet, as we have to deal with resistance levels for both indices at the moving averages. For S&P, we're testing the 200-day DMA. And for the NASDAQ, we are testing the 100 DMA, and we still have to contend with 200 DMA on the NASDAQ. The next critical level for the S&P is at around 4,100, and if we can break above this level, then we have a chance for a positive trending market. The recent moves, of course, have been sparked by signs of cooling inflation. We've seen cooler than expected CPI print last Thursday. So, I think things are looking fairly constructive. Now, when we look at the market currently in the U.S., we're encouraged by the breadth of sectors that are starting to show some signs of recovery. About 70% of the New York Stock Exchange are now trading above the 150 DMA. where this was only 40% back in mid-December and much lower in September. And when you take out the mega cap stocks, notably the so-called FANG stocks plus Tesla, the index is actually looking a lot better. Now, if I look at Asia, Asian markets like AAXJ or the EEM, they're all moving above the 200-day moving average, trading very constructively, and especially on the back of course, China reopening. And so I think that's good news overall for global markets. And I am seeing some, major fund flows or foreign investor fund flows into Asia. And then when I come back to India, the index is actually hanging in there fairly well. Like the sensex is, currently testing the 100-day moving average. It looks pretty constructive. And so given some of these large companies, reporting this week, I think it looks fairly constructive here.
Okay, that's a good way to start the show and start the day, right? So you're saying that the 4100 level on the S&P 500 is what you're watching out for next. So there's some more upside, and you're seeing India as a constructive market as well. On the Nifty itself, do you think the December lows of 17,770 or thereabouts is something that can hold through the course of the next few months? Because we've tested it once in the recent past. Yeah. What's your sense about the support level?
Yeah, I would say for India, it is currently testing, a major moving average. And if we lose that moving average, certainly the lows from December will come into play. And that will be a critical level because, if we were to break that level, then we're probably heading towards the 200-day moving average, which is about 4% below current levels on the sensex. I think that is a very critical level should we breach the 100-day moving average here.
All right. Hi, Dean. Good morning. What about crude oil prices? I think majority on the street believe that it's going to be moving low. I think you as well briefly alluded to that. What's your sense? It's at around $85 per barrel. From an India perspective, that's rather important. We want it to cool off. So levels on Brent crude, if you have one, and also the dollar index. Yeah. Well, that's broken the 102 odd mark. So that's, encouraging from an emerging market perspective. I think you had a view out there as well. Go ahead.
Yeah. So for oil, on WTI, we're currently sitting at 78. We see next support at around 70. And resistance is only, at 79. So very close at the 50-day moving average. Currently in the downtrend. So let's see if oil can, find support at 70. But I mean, it's good news as, oil continues to, kind of slowly come off. That allows economies to sort of reflate based on cheaper input costs. So that's welcomed. In terms of U.S. dollar, we're at 102. We see next support level just below around 101.50. Resistance is going to be at around 103, but certainly in the downtrend, given softer inflation numbers coming through in the U.S.
Dean, the one big thing in 2023 as we start is what's becoming clear, and I don't want to sort of overemphasize it, but so far data does suggest that inflation, which was the big problem of last year, is coming off sharply, right? And perhaps it continues to do that. The next big data point is the U.S. labor market data, but that's only early February. And then, of course, we get the rate decision. On the rate side, the 10-year, for example, have we seen the peak is already behind, in your opinion? And we continue to head lower?
Yeah, that's a great question. I believe it is because when you look at the 2-year yield, we're currently sitting at around 4.2 in the market. The Fed fund rate is at 4.25 to 4.5, and they're talking about, if you look at the spot rate, they're planning to go as high as 5.25. But the bond market is suggesting to us that the rate pretty much has peaked. And when I look at JP Morgan's results, for instance, which is a major money center bank in the U.S., their underlying assumption is we may get 1 or 2 rate hikes in the first half, but they are expecting rate cuts in the second half. So I think that, we're almost there in terms of peaking of the Fed's rate hiking cycle. And the bond market certainly is suggesting that as well.
All right, we'll leave it at that. Dean, thanks a lot for joining in and all the best for the rest of the year. Of course, we'll keep speaking to you, but thanks for your thoughts today. So that's a positive and optimistic way to start the day, is it not? They're seeing foreign flows come into Asia. They're looking at the 4,400 level on the S&P 500, which is an upside from the current levels. And the sensex is testing the 100-day moving average, and it's looking constructive. Let's slip into a quick break. There are plenty of stocks to talk about, so don't go anywhere. Our list of top 10 stocks is lined up in just minutes from now. So we begin the day with very subdued cues. The SGX Nifty is absolutely quiet. You have good earnings and bad. So on the good side, there's of course HDFC Bank. On the weak side, there's Avenue Supermarts, multiple downgrades there. So our research team is joining in to help us with the list of top 10 stocks. First up, of course, HDFC Bank tops the list. Abhishek, over to you.
Well, it's a strong top-line growth for HDFC Bank, Sonia. So the NII growth of 24.5% YOY is perhaps the best that you are seeing in 14 quarters. And the sequential growth in NII was at close to 9.5%, which is the best in last 7 years or even more, 28, 29 quarters. So the core operating profit growth has bounced back. It is coming at 19.3% YOY, which is the best in 6 quarters, and about 6.3% sequential growth, which is the best in last 8 quarters. The ROA or return on asset is at all-time high of 2.24%. Asset quality has remained stable. Both gross NPA ratio and net NPA ratio are flat on a sequential basis despite slippages hiccup. OPEX has remained elevated given the fact that the bank has opened 841 branches in 9 months, which compares to 734 branches that they opened in the whole of FY22. SDB Financial, now over there also, the PNL has improved. They have reported profits of north of 500 crore, which is up 65% YOY and more than 6% sequentially. This is on the back of the fact that their gross NPA ratio has declined by 115 basis points on a sequential basis. So both in terms of NI and PAT, HDFC Bank's results have beaten our poll. Back to you.
All right, Abhishek, thank you very much for that. So that's the key name to watch out for as we open up today. Now, Wipro reported numbers as well. It's perhaps the worst performing IT stock. It is the worst large cap performing IT stock. I would say there was a sliver of expectation that maybe they'll be able to do something this quarter. Doesn't look like it's turned that way. Rima is here with more details. Rima, hi, morning.
Hi, morning. So the Wipro ADR ended down 1.3% at a time when the Nasdaq closed up in the green with a gain of 0.7%. So Wipro ADR underperformed in the US markets on Friday. So that gives you an indication. In terms of numbers, it was a mixed bag. Q3 revenues missed the mark. It was a muted growth at 0.6%, lower than consensus expectations and also lower than what peers have reported. If you look at the revenue performance of the 4 large IT companies, Wipro is at the bottom with a 0.6% revenue growth. The next quarter's guidance is also muted at -0.6 to +1%. And the miss in the revenues has come despite very strong deal bookings. So the deal wins this quarter were at $1 billion, higher than the average that we've seen over the last couple of quarters. The total deal wins were also at record levels. Q3 margins, on the other hand, have beaten street expectations. Very strong showing there. Margins expanding by 115 basis points to 16.3%. And the management indicated that these margins, Q3 margins, could be the base going forward. So which is why some brokerages have gone ahead and increased the EPS estimates for Wipro because of the margin showing. But on the whole, it's a muted performance. Jefferies underperformed rating. Nomura has a neutral rating, while Kotak has a reduced rating. And this is despite valuations being lower than peers. Back to you.
All right. Okay. Thanks a lot for that, Rima. Well, Mangalam joins us to tell us about Avenue Supermarts. Well, Mangalam, those numbers look quite disappointing.
Well, the numbers were weak on Avenue Supermarts. No two ways about that. The EBITDA and the net profit both missed estimates. In fact, the margins, both gross margins and EBITDA margins, were at a 7-quarter low, and this at a time when the festive season was something that was expected to lift sentiment, etc. Revenue per square feet is still below pre-COVID levels. If you just take a look at the numbers, revenues of 11,569 crores, largely in line with expectations. But then again, those expectations were based on the company's third-quarter update itself. What the company did not speak about were the EBITDA as well as the net profit. And on those fronts, they have missed street expectations. The company themselves has said that discretionary non-FMCG sales, the higher margin products for them, have not done as well as expected. And as a result of which, we've seen a few downgrades as well. For DMart so far, it traded at elevated valuations, and Nuvama has gone ahead and said that they've cut the target valuation to 55 times EV to EBITDA, as again 60 times earlier, and they believe this can go further if the company does not, support on the growth front.
All right, and multiple downgrades, as you said. Morgan Stanley cutting their price to 3853, UBS cutting their price to 3530. So we'll keep an eye out on this stock. But Abhishek is with us to talk about L&T Finance and how the Q3 performance shaped up. Abhishek, over to you.
Well, they continue to distribute money, so disbursals continue to remain strong, up about 33% YOY and more than 19% sequentially. However, this is not translating into AUM growth. So in last 8 quarters, they have disbursed nearly 80,000 crore, while their AUM has declined by more than 11,600 crores. AUM growth continues to remain weak, up about just 3.4% YOY, and it has declined by more than 1.8% sequentially. This is despite the fact that even their focused AUM that has declined this quarter, which is a negative surprise. So ROE continues to remain weak at about 8.4%, which means that the capital is underutilized even now. Net interest margin, however, on the positive side is at all-time high of 7.4%. So X of exceptional items, there are various adjustments over there. The PAT is up 39% YOY and about 11.8% sequentially. And asset quality, slight hiccup over there, 19 basis point increase in the gross NPA ratio on a quarter-on-quarter basis. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, going back to Rima. Rima, how was Just Dial's numbers? Looked quite good.
It looks good. It's a strong showing. Revenue growth 8% quarter-on-quarter. Year-on-year, it's almost hitting 40%. Margins expanding for the 4th consecutive quarter. That's driving a 44% jump in the company's profitability. Paid campaigns, that's the key number, and that's seen an increase of 19%. And plus, Just Dial is a cash-rich company. The cash in the books is 3,900 crore. Back to you.
All right, thanks a lot for that. There are some more stocks that are in the news. Ekta is here to give us a lowdown. Ekta, over to you.
Thanks for that. Well, I'm tracking 2 pharmaceutical stocks. Dr. Reddy's, which has acquired the trademark rights of the breast cancer drug by Pfizer in India, which is going to go off patent just a couple of days from now. So that should be a sentiment positive for Dr. Reddy's, but there's a lot of competition which is expected in this particular drug. And secondly, Lupin, where their Somerset facility has been inspected by the US FDA, issued 2 observations. So that's definitely a positive, and hence the stock should probably be in the green.
Okay, all right. Thanks a lot for that, Ekta. Well, I'm tracking 3 stocks. That's Tata Steel, Sagar Cement, as well as NCL Industries. Let's start off with Tata Steel. There's a non-cash impact, but it's a sentiment positive that's come in. The British Steel Pension Scheme with Tata Steel UK, well, as sponsor, they have completed a substantial part of its de-risking journey. 60% of its liabilities are now insured by an insurance company. Earlier, it was at around 25%. Investec, they're positive on the stock. They say that Tata Steel's move on the incremental pension scheme buy-in and commitment to 100% de-risking pension, there are significant positives. And this addresses one of the key legacy issues with regard to that Chorus acquisition. So that's about Tata Steel, a sentiment positive coming in, expected to open up in the green. For Sagar Cement, well, they have been declared successful bidder for Andhra Cement. Remember, we had a bit of a preview earlier. Now they're saying that the resolution committee, they've gone ahead and said that, yes, the LOI has been issued out there. How is it positive? It consolidates their position in Andhra Pradesh as well as Telangana. The grinding capacity goes up by around 20% to more than 10.5 million tons odd. And also the stock trades at comfortable valuations of around $60 per ton. Finally, NCL Industries, smaller company, but they delivered a good growth on a lower base, a 27% dispatches growth. Valuations as well in their favor, so expect that as well to open up in the green. Well, let's run you through a quick recap of all the stocks we just covered. Stocks with positive news flow include HDFC Bank, Just Dial, Dr. Reddy's, Lupin, Sagar Cements, NCL Industries, Tata Steel, as well as L&T Finance. While stocks with negative news flow include Wipro and Avenue Supermarts.
Okay, so plenty of stocks to talk about, but let's also get you a grip on what's happening in the world of commodities. Manisha Gupta is joining in for a roundup of all the action there. Manisha, how's it been over the weekend?
Well, it's a long weekend, especially for U.S. markets, so expect a slightly weaker trade in the day today. But having said that, we have seen some profit taking come in for the crude oil prices. This is after 8.5% of gains in the previous week. But the dollar index at a 7-month lows, pick up in China demand. And the markets are also watching out for the OPEC meeting now in the month of Feb. The latest statement from them is what we will see moving the markets. The best of the gains continue in case of the metal prices. You have Dalian iron ore prices now trading at a 17-month highs. Copper is holding around at its 7-month highs. The gold prices have continued to surge up, now holding above $1,900 per ounce, which is a 9-month highs for gold as well. And silver prices trading at an 8-month highs above $24 per ounce. So the weakness in US dollar, almost a possibility, a certainty that you are looking at a 25 basis point rate hike is factored in by the metals, and that's what giving them that edge.
All right, Manisha, thanks very much for that. We'll take a very quick commercial break here. Up next, our market expert Prakash Diwan will be with us for some fundamental stock talk. Later, we will connect with Kajal Gandhi of ICICI Direct to discuss the third quarter earnings of HDFC Bank, which came through. Stay with us.
Welcome back. Hope you're having a good morning. For starters, the SGX Nifty suggesting a 20-25 point bump up the last time we checked. So a bit of a green start. Oh, it's tapered down those expectations now. Maybe we're bracing for more or less a flattish start. Prakash Diwan, market expert, joins us on the show. Morning, Prakash. Well, we'll be talking about HDFC Bank in just a bit, but I wanted your view on Avenue Supermarts. You know, those numbers appear disappointing. I'm looking at a couple of brokerage notes. There's a multiple scale back. There's an EPS cut as well, and it's never traded cheap. What's your view on the stock from here on?
Good morning, Nigel. So I think what's going against this name is the valuations. If you put the numbers in perspective in terms of how it translates or how the revenue stacks up with the margins, given the fact that there have been higher cost pressures, you'll realize that the footfall is also not as strong as the pre-COVID times, right? So it's not made a full comeback of sorts. Given the fact that in these last 2.5 years, you've also seen a huge penetration and spread of the online buying or shopping habits within people. So the entire way people shop groceries and some of these non-discretionary products, which Avenue looks at, is very different. So, that entire thing is changed, and the cost pressures will probably a bit at some point in time. And I'm not too sure if you look at the fine print, you still can't make out what's led to that. But typically, given the fact that they are more resilient than a lot of the retail players, you could have a Jan, Feb, March quarter, which is not looking as bad. So are you going to, up the estimates again? My answer to that is probably it's the valuation discomfort that has led to this sort of a cut in expectations. But I would give it one more quarter to call out whether there's a decline or a secular trend that's going to be far more, longer term for any kind of a thing. But of course, it's expensive. It will have to take the burden of disappointments on the price. But at some point, you'll see some sort of a turnaround and a relook at the price as well.
Okay, what about HDFC Bank? We will be, talking about it at length with our next guest. But wanted your thoughts as well.
Yeah.
Very strong all-round beat in earnings, NII growth of almost 25%. I think there was a little bit of a hiccup as far as the agri slippages are concerned. That was a bit on the higher side. But do you see the valuation gap now narrow between its peers like ICICI Bank?
Good morning, Sonia. So yes, that's the most relevant thing you need to look at. Given that the improvement in margins and all has been fantastic and after a fairly long time, and they've been investing into the business, so this could probably continue. I don't think this is so much of a one-off. The impending merger is probably the only, I would say, unknown of sorts in terms of how the market would respond to it in terms of the post-merger stacking up within portfolios. And my guess is it'll probably be much bigger because between the new HDFC Bank or the future HDFC Bank and Reliance, the kind of weightages that you have is significant, going to be significant in the Nifty itself, maybe about 24%, if I remember correctly. And that means that a lot of the money which ETFs will bring in as and when the season changes favorably, HDFC Bank will probably see a re-rating in terms of the PE multiples or the price to book multiples. At this point, it's inexpensive. The business looks promising, but it's just that if you want to play with that merger uncertainty is the question. So I'm sure when we hear Kajal after this, we'll probably be able to figure out much more in terms of the internals. But I'm quite positive on this, but I would give it some time to buy into the portfolio.
Prakash, hi, good morning. And yeah, we'll talk about HDFC with Kajal as well. Just two names from Friday and your thoughts. One is MCX, which saw a large move higher. On the back of course, that announcement from SEBI, more than one contract to commodity. The second is LTTS, which sold off by close. It was down 5.5% off the lows, but it was a sharp cut. Go on.
Yeah, good morning, Mr. So LTTS will have to clarify, justify, do a lot of explanation in terms of what's so great about this acquisition and why was it done now, and it's something where the minority shareholders might not like given the fact that their business is far more bigger as a platform than just a small business that they've acquired for a fairly decent consideration. So I think till then the market will probably wait before deciding on the fate. On MCX, I think, Prashant, it's very simple. You are looking at an expansion of the business potential that this exchange can do. I mean, you're increasing the SKUs, if I may use, for people to participate, and it's always good. It creates much more depth and breadth in the market for these products. The only overhang is, of course, the 63 moons this thing. So when you have that moon rise is the question. So if that doesn't kind of become a bummer, you at least know that this is going to be secularly, it's going to be positive for the exchange. There are reports which probably don't look at it very favorably, but my sense is it will be positive, if not immediately, in the medium to long term. And the exchange will probably come back in its own of sorts, which it hasn't been performing for quite some time because of various reasons. So I'm positive, but with a little bit of a dosage of patience and this thing thrown in. I mean, you don't expect any fireworks right away.
Okay, all right. Well, stay on. We do have an analyst joining us who tracks HDFC Bank very closely. So let's get her on board. Kajal Gandhi of ICICI Direct is with us. Kajal, good numbers coming through. Asset quality trends are benign. And, continuous growth in deposits of 20%. Very good increase in branch count as well. The only question now is that does it narrow its valuation gap between its peers? What's your own analysis of how to approach HDFC Bank?
So considering this result, they have posted strong numbers, as you also mentioned. What we need to see is that whether they are able to improve now onto the CASA also, because the growth in deposits is good, and I think they are doing it for a couple of reasons. One is their own growth, as well as with merger into HDFC Limited, they will need more deposits and replacement of borrowing. So I believe deposit growth will be continued. We will need to see how much it impacts currently on CASA and the growth on CASA for the future. So thereby margins will also need to be seen accordingly. And second thing, I think when we are talking about valuations, they have already reduced a lot over time. With HDFC Limited merger, I think the post-merger numbers are looking valuation-wise less than around 2.1 times forward on FY25 basis, so which is also quite cheap. So I think definitely there is scope for post-merger also multiples going up. We should see, I think, a 2.4 to 2.5 times on the bank post-merger and then the subsidiaries adding up. So I think valuations have a good gap and they should gradually start narrowing. Couple of maybe more approvals which we are waiting from the regulators, the NCLT and the RBI, couple of things which we are waiting. I think those are the only things which have held that.
Yeah. Kajal, margins were kind of flattish. Provisions dropped and, earnings looked up. I mean, the numbers themselves are, I think the corporate book was down a little bit. The numbers themselves, no problems at all, right, Kajal?
Yeah, no problems. I think people would have expected with the sharp rise in the NII that was seen, because NII growth has beaten expectations across for even after the IT refund thing. So there may be some expectation on I think the NIMs should have marginally gone higher, but I think they haven't gone up. So we should think that once the liabilities reprices, they won't fall also. So they are, I think, building in stability of margins, which should be, I think, read from this.
So you said that the multiples can go up further post the merger. I mean, post everything coming through. Would you raise your earnings estimate and target price on HDFC Bank post these numbers?
So yeah, possibility is there. We have also even raised in this, considering these factors only, that the numbers have continuously now last 3-4 quarters giving strong indications that there are no concerns on the growth front. So I think currently also we have raised the target from 1750 to around 1920, valuing around 2.7 times. Post merger also we believe we will value around 2.4 to 2.5 times, and if the stock further rallies, there will be scope, yes, for further upsides.
Okay, all right. Thanks a lot, Kajal, for stopping by and giving us that quick analysis on HDFC Bank. Going by the analysis and the broad feedback that we've got, that stock should be opening up well in the green today. Well, from banks to tech, Wipro reported what was a mixed set of numbers in the third quarter. The revenue growth missed estimates. However, the margins were a little over what the street was working with. Deal wins, though, were strong. Let's listen in to what their CEO had to say post their third quarter numbers.
As we are looking into Q4, what do we have? We know there is a certain level of uncertainty in the economy. The macro environment is showing a certain level of volatility. In some industries, more than in some others, we know that, for example, a sector that has grown tremendously in the past, the tech sector, is more suffering at the moment, and that's a fact of life. It's a reality. But in this context, what's actually very visible for us is that we continue to win in the market. We continue to win deals. What we are observing also is that there is a little bit of a delay in the way ramp-up happen in the new large deals, in the new larger deals, I would say. And this, a little bit of a lag, is creating a certain level of the time difference for us in terms of ramp up and projection in our business. There is also, I think it's fair to say, that there is certainly a certain level of volatility around discretionary spending.
Okay, all right. Well, Prakash, what's your take on Wipro? The revenue growth was a little lower than what the street was working with. It's the lowest among its peer set as well. The margins were a little bit better. What's your take on the stock?
So, Nigel, I don't think there was anything inspiring about the numbers, and I would attribute the improvement in margins, comparably with the other players, given the fact that it didn't have any additional cost impacts because of the nature of work that they do, larger contracts that they've been serving for the last many quarters now. But interestingly, if you read between the lines in the commentary, when the CEO said that discretionary spend is seeing a lot of volatility, there's a degree of volatility. I mean, it's a nice way of putting the fact that volatility is always a precursor to a slowdown, right? So, I mean, if there is volatility in decision making on discretionary spends, eventually you'll probably see a little bit of a cut there, and that's going to be reflecting in the subsequent quarters. And then guidances also don't really make you feel that the stock needs to get re-rated very majorly and very quickly. So if things happen, if the improvement happens, I'm sure it'll be discernible. So no hurry to buy into this stock at all after these numbers.
Okay, we have a very long week coming up, Prakash, and so do you. Your Friday is going to be extended with Reliance's numbers. But what's the expectation this time around? Anything that you're looking forward to, and how are you positioned in general on the stock?
So, Reliance is, in fact, I did mention while we were talking about Avenue Supermarts, one of the reasons where Avenue has been hurting also is the strong presence and, translatable sales revenue growth that Jio is clocked on the retail side. And that is something which will continue to march ahead. We've seen that happen in the last couple of quarters. So my expectation is it's going to be another quarter where they'll probably end up firing on all cylinders. The 5G rollout has possibly, I'm not too sure when that would have impacted in terms of the full quarter, but the rollout could have probably seen a little bit of a slowdown in terms of the push on the telecom side revenue build-up. But barring that, I mean, you have everything in place on the oil and gas, chemicals vertical, and the retail vertical, and the telecom vertical. So expecting decent numbers. In fact, it now represents one of the best bets if the Nifty were to revive its journey towards previous highs post the budget maybe. But it definitely is poised to structure itself in terms of the business, the revenue contribution from all its verticals. And the 5G investment rollout is what you need to look at in terms of the capex and the borrowing. So interesting week, yeah, and I'm sure Reliance will reward shareholders as usual from a quarter that's possibly gone well.
Okay, well, I do want to ask you your views on plenty of other stocks, L&T Finance as well. The disbursals were quite strong over there, but we'll do that in a bit. Prakash, just stay on. Before we slip into a break, let me tell you what's lined up in the next half hour of the show. We have Anuj Singhal that comes in next up to give us a setup on how Dalal Street is looking this morning. Post that, we have the top stock picks for the day from our technical and F&O experts. Following that, Prashant will be bringing you the Market Laser segment where we analyze some stocks and sectors through a technical lens. At 9:10, we have our standout brokerage report of the day. And before the market opens in CNBC-TV18 Stocks Board, we will highlight the top stocks in the news to focus on for the day. So don't miss out on that one.
Okay, welcome back. Anuj is now joining in with a quick look at how he's seeing the market trade set up as we start a fresh week. Anuj, hi, morning.
Morning, Prashant. It's a big week because for me, it's important to see if the Nifty is breaking that range. It's been stuck in this range. The lower end has been defended 2 or 3 times now. Now we'll see if upper end gets tested. Some important banking numbers this week as well on the mid-cap side. The other important issue is what's happening in the setup of individual indices. If you look at NASDAQ, that's now moved about 20, 50 and 100-day moving average and within 5% of 200-day moving average. Why is that important? Because even the Indian Nifty IT has quietly moved 10% from its recent lows and is now just 1.5% away from the 200-day moving average. So getting into the business zone of testing whether this is just a bear market rally or start of something big in IT. IT plus metals as a theme is working. And the dollar index has gone to 101.6, so that's also a bit positive for the market. The only issue is with the Nifty that over the next few days, you have a cluster of moving averages which are placed. I'll just go through those. The 10-day exponential moving average, 17,980. 20-day moving average, just 100 points above that, 18,090. And 50-day exponential moving average, 18,115. Until the time this 20-day moving average is declining, the market's overall texture still remains sell on rally. On the bank Nifty, you need to see, of course, how HDFC Bank opens, and then you take it from there. But here as well, you have some very important moving averages placed. The 10-day exponential moving average is at 42,426, and the 20-day at 42,653. So my sense is that you will see big resistance in this zone.
Okay. All right, Anuj, thanks so much for joining and giving us a quick market setup. Well, let's get our technical experts back on the show. We have Sudarshan Sukhani as well as Mitesh Thakur who join in. Good morning, gentlemen. Hope you're having a good Monday morning. Well, Sudarshan, you go first. Tell us what's the trade on the index. We had a good relief rally on Friday. Are there's, is there more steam left?
Good morning. See, the Nifty has found support at 17,800 repeatedly. Now, whether that support holds or not is something for the markets to decide. But Friday, we saw a decent rally from intraday lows. Now, the trade is to stick with the rally until proved otherwise. So, trade on the long side of the market, keep a stop at 17,850, which is just under the low of Friday. So, if that low is being defended, then we would like to be on the long side of the market. There is significant resistance on the upside as the market goes, as the Nifty goes up. So just be prepared to take profits wherever you can. But the trade today is to go long with that stop.
All right. Gentlemen, good morning. Mitesh, what about you? Are you still eyeing eventually further lower levels?
Good morning. That is the case. But I think, the Friday's rally suggests that there could be a stronger pullback first. So I am looking at the Nifty and the Bank Nifty getting past the Friday's high, which is 18,000 for the Nifty and about 42,450 for the Bank Nifty. I think once that happens, we could see an extension of this pullback, and then I would look at levels of 18,150 to about 18,250 on the Nifty to begin with. So in the short term, I think trading with positive bias, that break of 17,800 after about, multiple times in the last 4 weeks, we saw that level being tested, but it kind of managed to hold on. I think now possibly it could first give you a pullback rally before it breaks down. So as of now, I think, my view is slightly positive, but I would want to trade once the market starts getting past Friday's high.
All right, let's talk about individual stocks. Sudarshan, I wanted your list first up and also your thoughts on how to approach HDFC Bank. Of course, it has had a huge degree of underperformance over the past many years, but now is a tide turning technically?
Technically, HDFC Bank is in such a tight range that it's bound to break. Since a downside breakout for such a large, high-quality bank is very unlikely, I expect investors to be well rewarded if they hold on, if they buy at current levels and hold on to it for a couple of years. This is not an intraday trading strategy. It's for people who want real wealth, buy it and hold on to it. Now I come to my stocks. Bajaj Auto is a buying opportunity. The stock has been in a trading range. When the Nifty fell, it did not fall. That itself says something good about it. Buy with a stop under 35.80. My only intraday short is Dixon Technologies. That has been going through a bear market of its own. It's an intraday short with a stop above 36.75. L&T is a buy. It had a sharp decline and then a significant rally intraday on Friday. I think the rally suggests that there is buying at lower levels. Consider buying it with a stop under 2100. And finally, State Bank is a buying opportunity. This is more of a buy on dips trade rather than a clear uptrend. But if the Nifty is holding on to support, perhaps State Bank should also do that. Buy with a stop under 590. Surya, all the trades will make something if you hold on to them. I don't think these are intraday trades.
Okay, all right, got that. Thanks, Sudarshan, for that. Mitesh, what about you? Individual stocks you're tracking?
Nigel, I'm going with all buy list, slightly an early call, but I believe that there's a stronger chance in the short term of Nifty getting past 18,000, and therefore long trades would be my focus area. So I have 4 buy calls today. Federal Bank is a buy with a stop at 136 for targets of 145. And that's one stock which has been really outperforming. So Federal Bank is the first stock. I have one more name from the banking sector, which is IndusInd Bank. It's a conditional buy. It had a good move on Friday. 1240 is some kind of a pivot. Once it starts getting past 1240, 1242, buy with a stop at about 1224 and a target of 1280 in the short term is what I would suggest. That apart, TCS, after the numbers gave a good move, it's looking like some kind of a short-term uptrend. So buy here with a stop at 33.50 for targets of 34.30. And the final buy call is on HDFC Life. After a good breakout, the last week was all about a pullback and consolidation. So now can be bought with a stop at 593 for targets of around 625.
Okay, all right, gentlemen, great to have both of you with us here. Appreciate your time as always. So those are trading ideas coming through. We'll put out more. There's 2 minutes to go for the pre-open session. We'll take a quick break. We are back with the pre-open, and of course, we also have Ravi Menon of Macquarie Group joining in to discuss key trends in the IT space. Their top picks, we'll talk about LTTS and other stuff. Stay tuned for that conversation.